Happy Friday. You know, the Federal Reserve did something pretty amazing this week. They lowered the short-term rate by 0.5%, 50 basis points. Now, why is that so remarkable? Because they haven't done it since March of 2020. You see, the Fed's been concerned about inflation. And when they're concerned about inflation, which got to 9.1%, they raised the interest rate to try to cool the market. Well, they've been doing this. And they've raised the interest rate to a high point where it's been for highest it's been in a couple decades. So now, as the inflation starts to cool, now they're going to start working the interest rate back down. Because what they fear most is inflation. And their secondary fear is a recession. So they want to now lower the rate to have what's called a soft landing, which is the economy coming to a great point of production, which has an inflation rate of about 2%. So the Fed has a tough job. They normally, when they do lower or raise rates, they do it by a quarter or 25 basis points, a quarter point. They don't do a half, 50 basis points. So that's pretty remarkable. That sends a signal to me that the Fed believes that inflation is in check and that they are no longer concerned about inflation running up. Now, they'll continue to watch the market and assess it, but what does this do as far as interest rates? Well, if you look at the rates today, interest rates actually moved up a little bit. So you're saying, how could that be? The Fed just lowered the rate. Well, this is the way it works. When the Fed lowers the rate, the market knows what the Fed's going to do because there's talk out there about the Fed's intention. So when the Federal Reserve actually makes the move when they have their open market committee meeting, the market's already anticipating the move. So the market anticipated that the move was going to be between 25 and 50 basis points. Since it was within the boundaries of that, the market had already adjusted for that move. So now that that move has happened, you saw immediately the stock market jumped up and then it cooled back down. And then yesterday, after it had an opportunity to digest what the Fed did, it went up. The Dow was up 500 points, NASDAQ up over 400 points. We'll see what the market does Friday once it opens here at 9:30. But the point of the matter is the market's trying to get its sea legs on what has happened. And as it's doing that, it's also trying to anticipate what the Fed's next move is. And you're saying they just made a move, yes, but the market is continually moving and anticipating. So when the rates go up a little bit, they're looking more in the future than they are about what's happened. So what can we do? We can watch the 10-year Treasury. You see, the 10-year Treasury, what that level is, the 30-year over the last 50 years has traced right about 1.7 higher. So if you have been watching the market, you'll realize that the actual 30-year rate started working its way down prior to the Fed actually making their announcement because the market anticipated what the Fed was going to do. So let's watch that 10-year Treasury, add 1.7, and know that probably over time, as the Fed continues to make its moves, that the 30-year will track about 1.7 higher than the 10-year Treasury. So let's watch the market, see what the Fed's going to do, but here's the great news, and this is what you can take away from today. The Fed is lowering rates for the first time since March of 2020, and that's good news, and it shows us the direction of interest rates. Thank you very much. Hope you have a happy Friday, and this is Forrest Odenall checking off.